Crypto Mike here with the mic check 1212. Is this thing on? How are you guys doing today? Please hit the thumbs ups, the subscribe button, and the notification bell right down there in the corner. I'll give you 2 seconds. 1, 2. Let's go. All right, guys. Now, I'm wearing a shirt and a tie today. It's nothing special, but it does signify, I want you guys to realize, okay, what we're investing in is not funny money, all right? We're investing in cryptocurrencies that have utility. Therefore, they are valuable to the rest of the world, okay? For that reason, I want you to repeat after me. This is real money. This is real money. This is real money, okay? The rest of the world laughs, okay, when they hear about Bitcoin and that funny stuff, you know, that digital currency, right? What do you think the Fed printing billions of dollars is? Okay, you don't think that's funny money? It's the same exact thing as monopoly money. Let me show you. Even Satoshi Nakamoto put out a book. Let me see if I can find it real quick. He put out a book of right here. In his book, his coloring book, he compares dollars to monopoly money. All right, present day money. It's exactly the same as monopoly money, guys. Same thing, guys. All right. Now in this video, we're going to go over gold next year. Okay, we're going to go over Ripple's insights. And then we're going to go over a few other pieces of news. Okay. Now let's start off with these other little tidbits of news here. And so please go and follow me. The link is in the description. Follow me on Twitter. All right. I always post things that are on my mind, and I retweet posts that are important for me and the community. Now, let me show you. Here's a chart. Okay, I said XRP. I think we're coming all the way down to the red line and then up. Okay, now this is an XRP against a Bitcoin chart. All right, and it seems to me. Okay, I'm gonna go ahead and show you real quick. Now it seems to me just like what happened over here. Just like what happened over here, where it double bottom at the same spot. Right there, and then right there. Double bottom at the same spot. I think it's gonna double bottom again, do the same thing, and then do the same thing. That's what it. Now, it could also do something if it doesn't start getting utilized. Now, we are hopefully waiting for some flip of the switch moment, okay? Until then, XRP is probably going to keep following Bitcoin, okay? But still, that doesn't mean it can't go on its own in some sort of alt season. Now, I do expect it to come down, hit this line, okay? And that line is 15 cents. I say between 15, 13 cents. It could even wick down to 5 cents, guys. Now, I do expect it to do that. And then it could actually even come up to maybe, it could even come up to like here and then keep doing something like that and then start forming a curve up. Who knows? Who knows? We don't know what time frame we're looking at. We really don't. Ripple keeps this undercover. The whales, you know, the players that be, they're the ones who are keeping it undercover. Now, check it out. There's an inflection point here as well. So we have seems like we are following the time frame here. The inflection point goes from there, and it's not too long from now. The inflection point is right there. And that would kind of make it seem like we are gonna drop again. We're gonna drop again, hit that point. It might be a couple weeks that we're dropping, or it might be a couple days that we're dropping, or it might be a month. You know, who knows? I don't know, but I do believe we're going to drop a little more. However, this is the perfect point to start accumulating if you haven't already. And again, I say this every video, but this is not financial advice. I'm not a financial advisor. This is for education purposes only. All right, guys? Now, let me move on to other important topics here. Okay. There was another few here that I think I posted. Yeah, this is another one about Chainlink. the volume's really low. So under $2, volume is really low, guys. I'm telling you, my two most, for potential of return on investment, my two most bullish coins are Chainlink and XRP. So anything under $2 is, I mean, great buy for Chainlink, guys. Volume is really low, meaning no one who holds Chainlink, not a lot of people are selling right now because they're holding it so they could stake it. Now, why are they going to stake it? Well, because we think Chainlink is going to go all the way up to at least a 30 billion market cap, if not much more. Like, I think it's going to go up to a $300 billion market cap someday. Okay, maybe not in the next 2 years, but maybe in the next 4 years, or, you know, who knows, 5 years. Okay, but that would make it $1,000 Chainlink. And if I staked all my $1,000 Chainlinks, okay, I have a lot of them. If I staked all of them and I earned 5% at the minimum, okay, interest on those per year, I'm earning a lot of money. I'm earning enough to pay for my new car. I'm earning enough to pay for a rental, you know, on a house, whatever, you know. Okay, I'm earning enough to pay for a very nice vacation for my family, whatever, okay? That's why no one's selling, because staking these is going to be gold, guys, gold. All right, now this is the other one I wanted to show you. Ripple Drop, I think number 17 came out, and it's the best one I've seen so far. You need to go watch it. It's really good. Ripple Drops are, it's on the Ripple channel. They actually have their own YouTube channel. Go check it out. Ripple Drops are very good because they are well produced, and this one actually includes Brad Garlinghouse, what's his name, David Schwartz, the other dude, and the other Ethan Beard, Ashish, whatever his name is. A lot of the key players in Ripple. Okay, now I want to know what the heck is his name. How do you say it? Ashish Birla. Okay, and then there's the other dude here. I'm not good with these names, guys. I only know the top dogs for the most part. But they all have something interesting to say, especially if you go watch just a few minutes of it. Go watch from about 7 minutes to like 11 minutes or so. Baba Yaga actually directed me to this through his tweet. And if you don't know who Baba Yaga is, his name is Mr. C on Twitter. Okay, go watch the Ripple Drop. All right, this is where they drop different tidbits of info. I think it's monthly on their channel. Now, let's go on to gold. Five key reasons why gold's price is set to skyrocket in 2020. All right. Now, a lot of us have been thinking that gold will have a lot to do with our cryptocurrencies, and I do believe it. And if you do believe to the extent of the quantum financial system being a reality, then yes, each nation's cryptocurrencies that are coming, and it's happening, it's not just a theory anymore. We are seeing that CBDCs are a reality. Each nation's national cryptocurrency, okay, is going to be backed by gold, all right? And each bar of gold will be documented. They'll all be placed, and it'll be connected to each cryptocurrency. And for that reason, the value of the cryptocurrencies will be very valuable, and they will be backed. Okay, they will be backed by a real asset. All right. Now, 2019 has been a great year for the gold price, but the yellow metals rally is far from over, and here are 5 reasons why. Gold is having the best year in terms of returns since 2010. A move above a key resistance can send gold soaring. There are 5 reasons why the yellow metal can break through the resistance. Okay. They say gold price looks set to break a key psychological resistance, which is 1500. All right. It's been banging up against 1500, went above it, now came back down. And if it goes above it again, then we're gold. And it looks like it will. It really does, especially with the fundamentals coming. Okay, if 2020 really is going to be the year of recession, as the cover of The Economist indicates, or they actually state, I'll show you real quick. This cover right here, what does it say? Right here, if you can follow along with me, I'll just show you. Okay, this is The Economist. This is Rothschild owned, and a lot of times they use the covers to predict what's going to happen in the future. Recession. 2020, they're telling us these are the people who are in charge of the world financial events, wars, all that stuff. They're the ones who are in charge of us, apparently. They're telling us through their cover, recession, okay? Now, another thing I've noticed that they're saying, Trump, exit. So they really are saying that they're going to try to get Trump out and he might be leaving. I don't know. They're really trying to get him out. We'll see. He might actually be winning over the Rothschilds, you know. We'll see. But also, I want to show you the year 2020 is the year of vision. Okay, so we see 2020 there in red and green. And then we also see the word vision. Okay, so what are we going to see? I don't know, but I think a lot is going to be revealed in the year 2020, meaning that we will have clarity. Okay, we will have clarity. Things will be revealed to us that have been withheld from us for a long time, and that's my personal opinion. Okay, now their next cover was this, and it involved bars of gold. So what does that tell you? Yes, I think gold is going to be a hot topic in the year of 2020. Okay, so I'm going to go over this this article real quick, and then we're going to actually do a little recap of the live stream I did earlier on the Shane Ellis theory and my favorite key points of the Shane Ellis theory and what he says is going to happen with XRP. Okay, so over the last few years, gold has always rallied in the December and January period. The yellow metal is hardly a seasonal commodity, but the trend since 2013 suggests gold always closes higher after a rally in December. All right, it's going up, it's going up. Could this year's rally push gold past the key level? It certainly seems so, especially if you consider the fundamental reasons. Concerns about the US-China trade deal. Okay, as I warned earlier, there's a strong likelihood that the Phase 1 trade deal won't ever be made official. Now, that's baloney because he just signed it. They just signed it, okay? Now, I do believe Phase 1 is essentially fundamentally built upon gold. I think gold is a very elemental part of this Phase 1 of the trade deal, okay? And I do believe that January 1st is going to turn, we're going to turn a new page in the history of the world, and gold will have a big place in our financial system. Weakening US economy, okay, of course, that is going to be one of the key drivers driving value into gold as a safe haven asset as usual during times of economic trouble. The Federal Reserve keeps making credit cheaper to blow air into a debt-fueled economic bubble, but it can't last forever. Things will eventually take a turn for the worse in the form of a recession, which will be a tailwind for gold. Key Islamic nations are ditching the dollar as well. Hoarding is on the rise. Russia's hoarding, China's hoarding, all the nations are hoarding, even India. Okay, so that's the article on gold. Very just interesting. I think 2020 will be a very interesting year for gold, and I do think that paired with cryptocurrencies, gold will shine along with its new friends. What do you think? Who do you think those are? I'll leave that up to you. Now, I want to show you. The Shane Ellis theory, part of the Shane Ellis theory that I enjoyed the most, and it's just one little part, okay? And I'm going to show you that, and you're going to like it. It's a little analogy, okay, showing you why the Shane Ellis theory would work, okay, why the price would go up so much. All right, I need to just find from the one who posted it. And I want to say thank you, Nigel, for posting it here. Oh, it's way up here. Thank you, Nigel, for posting it in here in the crypto community channel. And I will find it. It's right up here. Just give me one sec. It's right up here, guys. Just give me one sec. Here it is. Good, good, good. Okay. Now I read the whole thing during the live stream. That's why you guys need to subscribe, because we had a lot of fun. All right. And we talk. I communicate with you guys. We kind of just go through stuff, and it's a very personable kind of experience we have. Please subscribe and hit the notification bell. Therefore, it will notify you when I go live, and then you'll be there with us. There was 450 people there earlier, you know, so a lot of the community was there. Don't miss out. Okay, this is Shane Ellis, and he makes great points here. Okay, now I want to just show you the best part, my favorite one. All right, this is the best one in my opinion. Okay. So this is, in a nutshell, an analogy that explains his theory to why XRP can jump up very high very quickly, okay, because of order books on exchanges being bought up, and then buy and sell walls being set up in significant amounts of XRP, all right, by Ripple partners, okay. Now, he says, this is an analogy. He says, imagine you're climbing a ladder with the rungs placed 12 inches apart. For a 24-foot ladder, that would mean 24 rungs, okay? Now, it wouldn't take too long to get to the top. It'd just be like a normal climb, right, to your roof or whatever. Okay, now imagine the same ladder that has rungs every single inch of the way. That would total to 288 rungs. Now, imagine that you had very short arms, and you could only climb one rung at a time, all right? You need to use every single one of them. It would take a lot longer, okay? The rungs in this analogy are the sell orders. The more sell orders there are, the more volume needs to be processed, and the same amount of capital over the ladder with only 24 rungs will spike the price further. When XRP goes live, it will be akin to a 24-foot ladder with 24 rungs, and the climber isn't a human but a squirrel. And you've seen those, you know, squirrels are very fast. Think of XRP as a spring that is being pushed down further and further as the human traders and bots have a chance to get in. When it is finally let go, XRP, or on-demand liquidity, will rocket it with a force. Okay? Now, one more thing. I want to ask you, why do you think Ripple chose to name their spring initiative Spring, X Spring? Okay, and then why do you think they chose to name their platform, their social media platform, Coil? Isn't that odd that they come out with two different things, products at the same time, that are both used as an analogy for the XRP chart? Do you think they might be warning us what's going on right now? Do you think that might be their only way that they can really warn us? Who knows? But looking back, they could just say, dude, we tried to tell you. It was right there. Spring, Coil. XRP's in a spring, and it's spring coiled up. It's going to launch. Okay, anyways, I don't know. That's just my own like little theory. But of course, I come up with tons of crazy little theories. So one more thing I want to go over was this. I know some people probably already went over it, but I haven't yet. All right. This is Ripple Insights, and see how many. Standing on the doorstep of a new year and a new decade, it's hard to believe that the first real public engagement with digital assets began only a few short years ago. But that digital asset roller coaster ride is smoothed out over the course of 2019 as speculation subsided and specialized use cases began to emerge. And they kind of go over the same stuff in their new Ripple drop video, which is about 15 minutes. I highly recommend you guys watch it. It's my favorite one by far. That utility helped demonstrate value in digital assets beyond trading and contributed to increased stability. While skeptics and critics might still view digital assets as a giant game of Jenga, just waiting for a wrong move to send all the blocks tumbling down, we here at Ripple see the future of digital assets as more of a vast set of Legos. By carefully piecing them together, it's possible to reimagine familiar words or create entirely new ones. It's just might be an entirely coincidental thing, but this block wall and this whole theme that they've been kind of using behind the scenes with their employees about Legos reminds me of Variable Guy's bricks. So what does that remind? What does that make you think of? Well, that's another reason he might be somewhat of an insider, or he might be, who knows, he might be being given information from an insider. Looking ahead, this is the important part. We believe 2020 will reveal new technologies and applications for digital assets that can lead to meaningful, tangible change across a wide range of industries. In particular, we expect 3 major themes to develop in the first year of the new decade that will lead to a more mainstream embrace of digital assets. Digital assets underpin consumer financial products. XRP is a digital asset custom designed to facilitate cross-border payments. A number of companies, including MoneyGram and Golance, and applications have endorsed this use case, and we anticipate even more will join the adoption curve over the coming year. But our team expects other digital assets and use cases to find traction in the coming year and decade. Ripple SVP of product Ashish Birla predicts that mobile wallets will enter the blockchain and crypto industries in a big way. Specifically, he believes that adoption of digital assets and blockchain technology among mobile wallets and super apps like Gojek, Grab, and PayPal will become more mainstream as they look to expand their services to keep up with customer demand and compete with digital banks. According to Ashish, that adoption will continue expanding to include new credit and loan products. He expects that these more mainstream use cases will first emerge in developing markets like Kenya, Nigeria, and parts of Latin America, where the need is most acute. These applications will be aided by friendlier regulations towards digital assets, which will also make them more attractive to tech companies seeking paths to expansion. Similarly, Ripple SVP of Customer Success Marcus Treacher sees international and micropayments expanding to facilitate new consumer uses. In particular, he envisions purchase solutions for tourists and travelers that no longer rely on cards or card rails taking root in 2020. He says, imagine if a Japanese tourist visiting Thailand could buy goods using a mobile app or a QR code, triggering an immediate cross-border payment from their Japanese yen account to Thai baht merchant's account. If more consumer purchase solutions start leveraging blockchain technology in the same way, the payoff will quite literally be huge. Marcus also predicts that big tech companies will continue to enter the payment space, hastening the growth of micro and wallet payments, supporting immediate low-value payment flows. This expansion of micropayments beyond traditional messaging apps like Telegram and Line to deep-pocketed enterprises should create a resulting surge of developers flocking to digital assets. Institutional adoption of digital assets accelerates. For digital assets and associated applications to have long-term staying power, institutional players must embrace the technology. We anticipate that such a wave of institutional adoption will begin in 2020, and with more traditional firms deploying digital asset and blockchain-based solutions. Brianne Madigan, our head of global institutional markets, says this will be enabled by trusted custody brands such as State Street or Bank of New York becoming involved in digital assets. The presence of recognized players will increase institutional confidence in the space and pave the way for greater institutional adoption next year, explains Brianne. CEO Brad Garlinghouse is even bolder, predicting that half of the top 20 biggest banks in the world will actively hold and trade digital assets in 2020. Now, they have this on their website, okay? That's a big promise, okay, for a $10 billion company. Okay, they're valued at $10 company. That's their valuation. That's pretty big. Okay, that's a big valuation. And of course, we expect their valuation to be much, much bigger over the upcoming years. However, they have hit mainstream media, okay? With their valuation being at $10 billion, eyes are starting to be cast upon them. He is also one of many on the team that believes fiat currencies will go digital in the next year. There you go. There you have it. So XRP will, at the very least, be a bridge currency. While SVP of Spring, Ethan Beard, expects at least one central bank to launch a tokenized representation of their fiat currency in 2020. Brad forecasts at least one non-G20 currency like the Argentine peso or similar will become fully digitized within the next year. The crypto industry evolves to keep pace. This expanded adoption of digital currencies by mainstream and national institutions will also have an impact on the industry supporting the technology. Specifically, Ashish and Brianne both expect it to produce a wave of consolidation amongst crypto exchanges. For his part, Ashish says the growing cost of keeping up with security, compliance, and technology will be more than the smaller exchanges can handle. Consolidation will enable companies to grow from regional to global players and better compete with bigger brands like Binance that have already begun acquiring several other exchanges. Brianne sees consolidation being driven more by the interest of digital assets and blockchain from institutional brands. She predicts, quote, an increased focus on true volumes, subdued retail interest in exchanges, and the appearance of more institutional-grade exchanges will combine to spark a wave of consolidation as companies compete to add volume and customers. Beyond exchanges, Brad expects to see consolidation among crypto companies themselves. He boiled it down to a simple numbers game. The world doesn't need 2,000 plus digital assets. While I don't think there will be one coin to rule them all, it's clear that if an asset doesn't have a proven use case beyond speculation, it is not going to survive. This year, a number of crypto companies began to slow down or even shutter, a trend that Brad expects to continue in 2020. A crypto push, these three evolving trends will together likely fuel what Brianne calls the next major push for the digital asset market. She projects that growing institutional comfort level with digital asset use cases, along with increased regulatory clarity in the US and next Bitcoin halving by May of 2020 will all lead to the next large adoption cycle. That breakthrough could also be aided by what Ethan terms a flight to crypto as the safer asset class in the face of a potential global economic slowdown. And lest anyone think we forgot about Libra, 'tis not true. Multiple team members chimed in to predict that Libra will neither launch nor be canceled in 2020. They expect that increased regulatory scrutiny, privacy concerns, and the defection of key association members will combine to at least temporarily stall Facebook's plans for the digital asset. Ultimately, the coming year and decade will see digital assets and blockchain continue to emerge as core underpinnings of the world's financial future. Today's first movers will have an enormous role to play in delivering that change for tomorrow. We are excited to watch it unfold. And that's it for that one. So go check out, if you want to read any more of these, go check out Ripple Insights. It's a very good website. I've got all sorts of articles here, just like the Ripple Drops, and you can find the Ripple Drop there too. All right, so a lot of good stuff there. And There's another one here that's really good. And this Series C funding is very serious, okay? 200